Thank you. All right, cool. So this is going to be a little bit different, guys. Today we're going to be talking all about options. So super excited to be here, Renee. Thank you. Thank you, Investor Inspiration. So I'll just start with a quick risk disclaimer, guys, and then we'll get right into the fun stuff. So trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, carefully consider investment objectives, level of experience, and ability to tolerate risk. So as we know, these are educational presentations. Whenever I talk about specific levels, it's just where I see value in the market. Okay, so here's my big promise to you today. This works. I've taught hundreds how to trade options this exact way, and I use this approach every day in my trading. It's the foundation of exactly how I trade and exactly how I teach options. I'm going to speak definitively about this trade because it's special and that's important to understand. So this is going to be for any trader. Anyone who's risking money in the market to achieve whatever individual goals you want. It's going to be simple, straightforward, but most importantly, it's correct. And not really taught on other webinars, and it's not taught in trading books. I've broken this process down and has been proven to help others. So I'm not asking you to believe anything just yet, but I am asking you to keep an open mind because this works, and I'm making the assumption that it's very different than how you approach the markets. Here's exactly what I'm going to show you. I'm going to show you how to find and buy low-priced options, putting ourselves in position for awesome returns without staring at the market all day and without worrying about our position. Okay? I think staring at the market all day doesn't really help. In fact, it can hurt. And it hurts because you're inviting emotion into the trade. It's like forced discipline. You make good decisions over time, and the market will reward that good decision making. Okay? So that's what we're doing. This presentation is all about buying the little stuff. And just to be clear, if you buy an option, if you buy a call, if you buy a put for 30 cents, that's $300 if you buy 10 of them. You can never lose more than $300. Okay? You can buy one of them for $30. You can never lose more than $30. Okay? The feedback I get most often is, wow, this is completely different than I was taught, but it makes sense. Or, I never knew you could trade options like that. What I'm about to teach you changes clients' perspectives. Just like Steven. Steven, maybe like some of you. Steven reached out to me. He was frustrated with options. He was so frustrated he was ready to give up. From the start, I could tell Steven worked hard, but he was learning the wrong approach. For instance, he had no idea how to manage his position. He would only sell credit spreads. He was miserable. He was ready to quit. He was bouncing around from guru to guru, trying everything he could, but in the end, he was just overwhelmed. We started fresh with a complete blank slate, and Steven is in love with trading. He's able to work from home and be a stay-at-home dad with his little boy. So let me go over why I'm qualified to teach you about options. Because if I was in your shoes, I sure would want to know that. I've been trading for 18 years. Okay, not marketing, not sales, just pure trading. Where I really learned about options is when I was a market maker on the floor of the Chicago Board Options Exchange. Okay, here are some of the things that I've done throughout my career. Options market maker. I've trained over 100 professional traders. As a market maker, I was concurrently trading 100 names and 1,000 strikes. I was also a portfolio manager at a family office in Chicago. Jen, you could absolutely trade options in an IRA. You just can't sell options, but we're talking about buying options here. Now, I share my background with you only so you can see I'm an expert in this area. Okay, I'm not a marketing guru. I trade for a living, and I work with a select group of retail clients. I make my living taking money out of the market. Little old school picture of me on the floor. So you guys made an awesome choice to attend today's completely free training. You'll see a lot of different approaches. And what you'll need to do is see what makes sense to you. What I'm going to share with you, this is not a trick. This is not something you can use once. I'm going to teach you how to trade options. And like others before you, prepare to be blown away. So let me ask this, guys. Who here trades options? Or Who here doesn't trade options because maybe you see them as too complicated or confusing? You can just answer and I'll keep going and I'll get back to the answers. So, like anything, if taught wrong, sure, they're confusing. But what we do is simplify. Because it's not about what I know. It's about helping you be in the strongest position to succeed and meet your goals. And the option market right now presents the best opportunity in trading. So if you're willing to learn, this approach gets results. Okay. So guys, are you out there? Who here trades options? Some no, some yes. So right now, the options market is bigger notionally than the overall equity market. In 2015, it was the first year that options were bigger than the equity market. Options are too big to ignore. They really, really are too big to ignore. Buying options is really straightforward. Most are taught to sell options. Most teach selling because it's easier. When you sell, you're going to make money more often than not. Do some of you guys only sell options? For me, I hate risking $5 to make $1. I want to risk $1 to make $5. What would you rather do? Risk $1 to make $5, risk $5 to make $1. And let's say you did that for a year and the outcomes are the same. Which is a better way of life? Which is more relaxing? Right? Risking $1 to make $5. So let's go over an example so everyone understands the risks and rewards of buying options. And hopefully you'll understand from this first example that you got this. So here we go. ABC stock. Just a phony baloney stock, phony baloney example. Stock's at 10 right here. The 12 strike calls are 40 cents. If we buy 10 of those, it's $400. We can buy one for 40. You can never lose more than you invest. So if I buy 10 for $400, if ABC stock goes to 0, I can only lose $400. How I teach options and how I want you to think of this position, if you're long 10 of the 12 strike calls, I want you to think like you're long 1,000 shares. That's it. Keep it simple. Why would you want to be long 1,000 shares at 12 when the stock's trading at 10? You get massive, massive leverage to do that, right? It's only costing $400. So that's how I want you to think about options. Stock goes up to 11. Stock goes up to 12, 13. Let's say the stock goes up to 14. Right now with the stock at 14, you're long 1,000 shares from 12 if you bought 10 calls. So you're up $2,000. 14 minus 12, 2,000 minus whatever you paid for the option. The biggest mistake that I see retail traders make with options is not having understanding of managing your options position. If the stock goes up to 14 and I'm long 10 calls from the 12 strike, the way I'm going to manage this position is I may sell some stock. We have the ability to sell stock to manage your options position. I could sell 500 shares of stock. If I sell 500 shares of stock, long 1,000, short 500. Now I really net long 500. That's how I teach to manage positions. Once I can get traders to understand that you can manage your position using stock, that's when I see really great jumps in their performance. So hang out with me. At the end, I'm going to share something really special. And it's not for everyone, because it takes commitment, it takes effort. But I'm going to give you a little heads up. I wanted to do something special because a lot of you aren't familiar with me, an active day trader. So at the end of this presentation, I'm going to offer a class, and that class comes with lifetime access. It's once a month, forever. And I'm doing this because I want you to see, and I want my clients to understand that I'm not going anywhere. I'm there with you as you go through the process of learning options. I believe options are very straightforward, and I could teach them to anyone. So that's the commitment that I'm going to make, a lifetime of live classes at the end. For some, this offer will make absolute sense, and I look forward to working with you. Also, for some it might not, and that's really cool. I appreciate being here, and I thank you for you guys hanging out with me. My objective, my goal for this is I want you to understand why we do these trades, and then I want you to understand that you can have results just like the hundreds of others I've taught. To be a market maker, you need to be an expert at valuing options. With that being said, think about the benefits of buying the little stuff, investing small for a huge return, being in a $300 trade where you can capture awesome upside. Imagine this. Maybe the market starts getting hit hard. Uncertainty, OPEC, Fed, whatever. Maybe you're long a few $100s in little puts. Your overall investment portfolio is getting killed. But all of a sudden, these little puts that you invested under $500 are worth $5,000 or $10,000. How would that feel? Pretty cool, right? That's one of the benefits you could expect. Now, does that even seem possible, or are you thinking, this Jonathan guy's crazy? Imagine if you invest $200 in a little position, and all of a sudden that position returns 100% in a week. Or like Kelly down here, 600% in just 1 week, a $2,700 gain. Thomas, 800%. Or even higher. Mark, 2,200%. Mark bought the 10 strike calls for 9 cents. He bought 100 of them. That's a $900 investment. He could have bought 10 of them, that'd be a $90 investment. He bought 100 of them. $900 he covered when he was up 20,000. This is the exact trade that Mark did, and the exact trade recommendation that you'll see was before the actual trade. Here's the trade idea. It was right here. YRCW came out with earnings. Their earnings were bad. The stock started falling. It was down 50%. I was on the conference call. I realized that the earnings are bad, but they don't have accounting problems. It's not like tail risk. They're just bad earnings. Sent out a note to the subscribers talking about buying YRCW. That's what all these guys did. The 10 strike, he was long 100, you're long 10,000 shares. Once it gets above 10, if you bought 100 of them, like Mark did, 2,200% return. Awesome, awesome trade. Is this you? Here's another thing that clients are sick of. Spending more and more money online, buying another indicator, another proven system. Maybe you've spent tons of money online on tools that are no longer working. Not only are they not working, they're also costing you money. Okay? That's why throughout this presentation, I'm going to show you lots of proof. Proof with my background, proof with my knowledge, and proof with clients' performance. Learn something real. Learn the correct way to trade options. That's something that you can always build on. It's not a gimmick. It's real education. And that's what I focus on. Here's the growth of the options market. The options market is too big to ignore. Again, 2015 was the first year that options were bigger than the overall equity market. SRPT. These are the kind of stocks that we trade in the swinging for the fences strategy. SRPT has jump risk or event risk. All that means is it could close at 55 and open at 15. It could open at 15 and close at 50. That's what jump risk is. Apple, Amazon, they don't have jump risk, right? We're not going to come in and Apple's going to be trading $200 or $50 tomorrow. Stocks like SRPT have jump risk. Chris, this isn't only for weeklies, this is for options. All options. It's about option valuation. 2012, I sent this note to my market making desk. SRPT trades 1050, might trade 26. This is when I became obsessed with this strategy. This is the exact email that I sent. About a month later, SRPT opens at 10 and closes at 50. My market making desk bought 200 of the 14 strike calls for 40 cents. I bought 40 of them. $1,600 investment is worth over $100,000. Okay? Joe, I'll show you. This was in 2012. I trade for a living, and this is probably a good example of how a professional sees the market differently. Again, SRPT. I have a Google alert on all my stocks that I trade. What that means is when any news comes out about my stocks, I get an email right away. September 14th, this email came across. The FDA confirms that SRPT's nemesis leaves the agency. I knew SRPT was going to get approved for their new drug. They were a 50-50 split in the FDA. Once I got to see that Ronald Farkas left the agency, I knew something was up. September 14th, September 15th, I shared a trade idea with the membership. September 15th, 3 days later, SRPT gets approved. It goes from 20 all the way up to 60. The great thing about this trade is it didn't happen when I was a market maker. It happened when I had retail clients. Stacy, I'm stuck with him for a while, tripled his money very quickly. Taurus, I had to look this up. I had no idea what this means, but you're the ambassador Quan of my trading world. And then Mark, long 3,500 shares from 28. The stock opens at 60. Mark makes over $100,000. Okay, this was awesome. Ambassador Quan turns out from Jerry Maguire. So has anybody been told this? I'm sure someone has said this to you because I've heard this comment over 100 times. I was told never to buy options. Buying options is dangerous. I think it's funny. If someone teaches that you should never do something that half the market does, don't you think there's a little bit of edge in learning that? Right? Buying options is more difficult. I don't disagree with that. But if someone says that half of the market, what they're doing, is too hard, there's probably edge, right? Let's put our common sense hat on. There's probably edge in learning that. Here's the difference between buying and selling options. This is general, but it gives you an idea. When you buy options, whenever you buy an option, you're long volatility. You're long movement. You want craziness. Whenever you're short an option, you want quiet. You buy options, you're going to lose 60 to 90% of the time. Okay? 10 to 30% winners. It's just an overall guide. You're long volatility. When you sell, it's the opposite. You're going to risk $5 to make $1. You're going to win more often, but when you don't win, you're going to lose quite a bit. That's the main difference between buying and selling options. But remember, if you're only winning 10% of the time, don't think that's a bad thing, as long as you're getting paid good odds. I don't mind losing 90% of the time if my winners are returning 120%. Sign me up. I'll do that all day. Don't get caught up. People sell. People teach how to sell options because they can teach you something where you'll make money 90% of the time. The problem with that is that 10%, what happens then? That's why people teach selling options. Does anybody know what this is? This slide is going to be the most important. What this is, guys, these are the 5 inputs that go into the Black-Scholes model. The Black-Scholes model is what's used to value 98% of all the options. There's only 5 components to the Black-Scholes model. Let's say we're trading Apple. We know what the underlying stock price is. We know what the option strike price is. We know how much time that's given, right? They're all given. The risk-free interest rate, what's a 1% rate? A 2-year yield, 1-year yield? Nothing, right? But 4 of those are given. When you trade options, the only thing that we need to be concerned with, the only thing that we're trying to figure out is the one subjective component, and that's volatility. If you're trading options without using volatility, you're at a significant disadvantage, and hopefully this chart, this graphic shows you why. There's only 5 inputs that matter. 4 are given to us. There's only one that we need to figure out. Here's the difference between low volatility and high volatility. Low volatility on the left, again, ABC, phony baloney stock. Low volatility, let's call that like GE or Microsoft. 30% volatility. On the right, high volatility. It's a crazy stock like, I don't know, a gold miner or 3D printing, something that moves all around. 30 days to expiration. 22 calls are only a dime on the low volatility stock because we could buy 10 of these. It's $100. We can never lose more. But what are the odds of this stock really getting up to 22? It doesn't move very much. So that's why it's only 10 cents. The puts are just the opposite. They're only 10 cents too, because this stock, it ranges between 19 and 21 for the last 17 years, right? So they're worth nothing. But over here, you can see this guy moves around. This guy could easily trade 23. It could easily trade 17. So therefore, the options are more expensive. This is the biggest difference between pricing, high vol versus low vol. Joseph, the major risk in buying options is time decay. That's sure, but you're factoring that in when you do that, okay? Not Vega. Don't get confused with Vega. So what I do, guys, is I simplify options. For what you're doing, the only Greek that matters is going to be theta. Vega, you don't have to worry about Vega. You don't have to worry about rho. You really don't have to worry about gamma for a while. Okay? If you understand theta, theta is just the time left in an option. So right here, with 30 days to expiration, this is worth 80 cents. With 20 days to go, this is probably worth 60 cents or 50 cents. Theta just came out of it, time. With more time, this has a higher likelihood of trading over 22. With less time, it's got a lower likelihood of trading over 22. So that's all theta is. Time, premium. Okay? It's about simplifying things. It's not showing you what I know. It's showing you exactly what you need to know. So in my swinging for the fences strategy, we only need 2 things. We want stocks that move like crazy, volatile stocks. We also need tradable options. And what that means is we need a bid and ask spread that will allow us to enter a trade. And this is where my expertise is focused. And let me explain why. This is the reason why I have edge in this trade. Think of Apple. How many analysts cover Apple? 100? How many market makers trade Apple? 70, 80? Because of the analysts, because of the market makers, because of the volume, Apple is the most perfectly valued stock in the world. That's by definition. The more analysts that cover a stock, the better value that stock is. I want stocks that are off the beaten path. YRCW, SRPT. Those that have 2 or 3 analysts. Those that have 1, 2, 3 market makers. When I was a market maker, if I was to trade a name like YRCW, I might be 20-cent bid at $1 for an option. Right now, those same markets are 40 cents bid at 50 cents. Very, very good for the retail trader. That's why this trade works. Here's another example, and I'll fly through this because I'm kind of running out of time. CSX. It's up 20% because of a rumor that somebody was going to buy it. When something comes out on a high volatile stock and it's a rumor, who knows where it's valued at, right? It's just nonsense. It's not like it comes out and says, there's a cash offer at $45, so it should trade there. So here, CSX jumps up to this level. I want to buy calls and buy puts on this stock because I'm a big believer that if a stock jumps up 20% on a rumor, Nobody knows where to value it. They're just trying to figure out a value for that stock. We did this trade. It turned out CSX breaks up to the upside, and the options go from 25 cents mid-market. The next day, they were trading 85 cents, a 300% return, by knowing what to look for. Are you guys following me? Is this all making sense? Do you guys see the potential of learning how to properly do this? Because what this is, it's the foundation of trade options forever. It's learning correctly. It's like saying there's a lot of ways to skin a cat. Well, in trading, there's not, and certainly not in options. And again, I didn't perfect this until I spent time as a market maker. And now, clients routinely tell me, wow, I didn't know you could trade like this. I didn't know you could do this. I thought options were way more risky than that. Remember, if you've been trading for a while and not getting the results you deserve, stop. It's not going to change. Change is hard, I get that. But it's life, it's money, this is serious. Because if things don't change or get worse, what then? So here's where I'm coming from. I think you'll see there's no BS, there's no games. It's just real information from someone who's by your side. And this thinking will completely transform your approach to trading. And for those frustrated with options, it's a simple change. So the truth about trading, it's not complicated. When I hire traders, I'm not concerned whether they can learn the material. I'm concerned if they have the temperament to be good. Are they stubborn? Can they admit default? Are they coachable? Imagine if you're the next testimonial that says, I'm $1,300 away from doubling my account in a month on an $8,000 account. What would that mean for you? For Stephen earlier, his dreams were to be a stay-at-home dad. For me, when I started making money, I traveled the world. I got fancy cars and wasted money. But now my trading style allows me to trade at home, coach my boys playing baseball, spend time with my awesome wife. Here's another example. This one's kind of fun. In California, there was a huge gas leak. This is an infrared satellite picture of a huge methane gas leak. The press reported that the company owned the well was California Energy. I never heard of California Energy. That seemed fishy to me. California Energy sounds like a small company. Major companies own these wells. It turns out Sempra Energy owns this well. I shared this trade, 85-80 put spread, 20 cents. If you buy 10 of them, it's $200. You can never lose more. If a professional options trader tells you that he's buying 10 options for $200, would that be something you'd be interested in? If your reward is $4,800? David invested $400 and made $9,600. Okay? It's not luck. Sure, it's luck that this paid off. But what we're doing is putting ourselves in high probability positions over time. And that adds up. And hopefully you can see from the feedback, there's a lot of people being able to take advantage of this. This is something that technical analysis cannot show you. So swinging for the fences. It covers everything you need to find, to trade, and most importantly, to manage these positions. It's all about finding inexpensive options. It's all about finding those options priced less than 50 cents. We want to risk small and go for big returns. The great thing about this trade is you work a limit order to get the trade on, and then you're done. Let it work. When you buy an option with 25 days to go before expiration, part of that commitment is holding it for 25 days. If you buy an option for 30 cents and you invest $300, there's no stop. We don't get out when it's trading for 15 cents. We decide on our risk beforehand. If you don't want to risk $300, you only want to risk $150, instead of buying a 10 lot, you got to buy a 5 lot. Be patient, trust the work that you did, and then hold it for the time or until we could take off an awesome profit. Okay? So who is this specifically for? Beginners. If you've never looked at an option chain before, you don't know anything about options, it'll take time. If you're risking money in the market, options are too big to ignore. This is the exact approach I was taught, and I always start with this with beginners. So if you're willing to put in the effort, I got you. Same for those newer to options just learning. I believe the information across the internet on options is confusing, and a lot of it's conflicting. You're not going to find anyone more qualified than I am to teach you this. For more experienced traders, are you coachable? Are you willing to say, what I'm doing is not working, I can do better? Because this group is vulnerable. You know enough to get yourself into some trouble. So think about how trading is going. Think about your performance. We're all here for a reason. Now think about what happens if trading doesn't change or gets worse. What happens if those credit spreads start costing you real money and you take a big hit? Okay? I'm here to tell you, if you're willing, I can have you on the right path. The path that limits your risk by learning correctly through proper education. And if you're not ready, you can keep pushing it off. Lots of benefits to buying inexpensive options. These 5 will have immediate impact. Define risk. You can never lose more than you invest. Set it and forget it. You put the trade on and let it do what it does. Super straightforward. It can protect your overall investment portfolio, and it's the foundation to trade options forever. Okay? Here's Paul. Paul sent me an awesome video that talked about how this Swinging for the Fences program completely transformed his trading. For Paul, the main benefits were twofold. For one, the obvious one, since joining, his relatively small account goes from 6,000 to 11,000. But to me, what he said next is what I take most pride in. He's having lunch with his wife during the day. He doesn't feel a need to babysit his position all day and stare at the market. These positions, once you put on, it's over. Then let the market do what the market's going to do. So Paul's back to loving trading, but best of all, he's got more free time. So let me walk you through exactly what you're going to learn. And it's an easy 3-step process. Find the right trades. I teach Swinging for the Fences using a completely free scanner. We use FinViz, F-I-N-V-I-Z. Great, powerful scanner. Most important thing is I show you why we're in these trades. We put the orders in the market. I'm not sure why there are question marks on there. That's weird. And then I teach you how to manage those trades. That's what we're doing. Okay? As the market changes, we're going to adjust as well. We trade differently when the VIX is at 10 and the VIX is at 20 and the VIX is at 30. That's what we're learning. That's what we teach you. We're not robots. This used to surprise me, but now I get comments like this daily. How come I never learned how to do this? Or, wow, this approach is a game changer. I always thought options were so risky. Or, I never knew you could manage options by using stock. Jaroslaw's comments about scalping gamma is the biggest change I see in clients. That's the real game changer. The other major benefit to swing is accountability. I personally think this is the most powerful part of education. For instance, I use an app to log food. Right now, I'm 10 pounds heavier than I want to be, probably because I'm working so much. But I know if I use my app that makes me log food, it holds me accountable because it's black and white. So when I eat a donut, instead of being, wow, I shouldn't have ate the donut, but I did anyway, I enter it into my app and it shows that I ate 500 calories in 3 minutes. What we have with swing is accountability, not only in trading, but in continuing education. If there's a topic that you don't understand, ask questions. I'm with you for as long as it takes. So here's what you get, and this is just the start. You get Swing. It's a 2-hour on-demand video. Start watching it immediately. Okay? Easily a $997 value. This approach, like others before you, will change your perspective. If you're coachable, it works. It's ideal for smaller accounts. It's ideal for bigger accounts. Look at Drew. Drew started with a $2,000 account. Now he's up to $5,300. Here was Paul from earlier. One of my favorite trades, bought a one lot for $32, up 1,100% on a one lot. Okay, that's awesome. The first bonus you get, and I want to over-deliver, again, because most of you haven't been on my presentations. I'm adding a workshop. It's a 1-hour presentation. It talks about and teaches the 3 ways to manage an options position. There's 3 ways. Get out of your option, number 1. 2, roll it into a spread. And 3, manage your position using stop. That's what we call scalping gamma. Add them together, you get the 2-hour swing and the 1-hour 3 ways to manage your options position. Here's something that's a bit difficult to talk about. I love working with my clients. I receive unbelievably sweet emails, a lot that you've seen today. What makes me most uncomfortable is when someone says, wow, you're a genius, or you're so smart. Just to be clear, I'm no genius. I'm not the smartest person in this room. I guarantee that. But what I do offer is an expertise in a very specific thing, and that's options valuation. Okay? I'm smart enough to know that I don't have all the answers, but I'm also smart enough to know that my skill set presents edge in this trade. Maybe you can relate to Mike. Mike's invested a ton of money before. Then he had to upgrade for $2,500. Okay? He's felt alone. Mike and I have been working. This is how much he emails me. And Mike's doing fantastic. He's one of the ones that his account doubled. Here's where the offer is special. I'm committing to you. The last week of every single month, I have a live class. It's 60 minutes. It's swinging for the fences. We go over the workshop and we do a Q&A. We do this once per month. Anybody who moves forward with my flagship product, Swinging for the Fences, has an invitation to this class forever. Okay? After 3 years, if you come to 36 classes, that's awesome. Okay? So you get the 2 hours swing, start watching it immediately, the 1 hour managing your options position, and then live swing classes at the end of every month forever. Before I reveal the price, let me ask you, if all this investment did was protect you in options, would it make sense? Protect you from some other silly approach? If all this investment did was give you more time to spend with your family and more time away from the market, or if it even just gave you the confidence to trade options forever. Now think about what it's worth to you. 3 hours of awesome content, and then unlimited option classes, and hopefully by this presentation you can see that I know options. I can explain them in a way that makes sense to you. What's that worth? 5,000? 1,000? How about this? What I offer today is one of those special opportunities. You might be thinking, what's the catch? There's one catch. My best clients take action. Okay? So for the price I show on the following page, this is good for today only, or if you're watching it on the replay, as long as the replay is available. And we're doing this today for anybody who moves forward for $297. $297 gives you 3 hours of on-demand content and unlimited classes forever. And if we break down those classes of live training, after 12 months, that's $24. After 24 months, it's $12. And that's not even including the value of the recorded content. So for anybody who's interested, it's activedaytrader.com/swing.